Hey, this is Warren Redlick. I've got breaking news for you out of Washington, D.C. and analysis. The Senate just moved forward a bill that would lower the cost to you of buying a Tesla, a massive tax credit. Anyone in America buying a Tesla made in America would save about $10,000 following this bill if it goes through. This matters to you if you're a Tesla shareholder, and it matters to you if you're a Tesla car buyer. I'm going to explain it all to you. Are you ready? Let's go. You can see here next to me the headlines that just broke about a $12,500 tax credit. It's not that simple. I'm going to go through it with you. These are some articles. I'm going to cover the Reuters article at the top, and we're going to talk about some more, and then we're going to go look at the actual language of the bill and how that will play out for Tesla and for other car companies, for car buyers and for shareholders of Tesla stock. Before I go further, I just want to mention I did a video before about this topic with a different bill that is still pending in Congress, the Green Act, which would be a different approach to tax credits. You can learn more about that bill here. I think the current bill is more likely to pass, so the Green Act is less likely to pass, but it might be helpful to look at that video as well. So this is the Reuters bill, and as you can see, U.S. Senate panel announces EV tax credit up to $12,500. Up to $12,500 is the important language here. Let's look further in this article. Some key details. In the second paragraph, it's limited to vehicles that are priced below $80,000 to qualify for the tax credits. So the Tesla Model S long range would qualify. The Model S Plaid and the Model X's would not qualify under their current pricing. And some other vehicles like the GM Hummer EV would not qualify. The Porsche Taycan, as far as I know, does not have a model under $80,000. So this tax credit's going to already excludes a lot of luxury vehicles. This article mentions that the current maximum tax credit is $7,500 with no maximum price, and it phases out for individual automakers once they hit 200,000 sold. Tesla hit 200,000 sold a long time ago. Tesla buyers do not get this credit. As you can see in the third paragraph, both General Motors and Tesla have already exceeded the cap, so they don't get the current $7,500 tax credit. The new bill will open the tax credit up to both of them and most vehicle manufacturers, most electric vehicle manufacturers. In the last paragraph, you can see it got out of the committee on a very close vote. It would eliminate the cap, so anybody who's over the 200,000 vehicles gets to keep going. The credit phases out over 3 years once 50% of U.S. passenger vehicle sales are EVs. It's a little more complicated than that. I'll get into that more a little bit later. It's not necessarily, when you read that, it's not necessarily what you think. I saw some people get it wrong, so we'll go in depth on that as well. So in the first paragraph, you see a little bit more details. It's the base $7,500 credit from before, and then you add $2,500 credit for vehicles assembled in the United States. That's all Teslas that will be assembled in Fremont, California, and Texas. It applies to other vehicles as well. It does not apply to the Ford Mustang Mach-E, which is assembled in Mexico. It's interesting the way they phrase that. I wonder if that's going to be changed to let the Mach-E get qualified. There's also another $2,500 for vehicles who are produced where their members are represented by a labor union. As far as I know, no Tesla vehicle factories have labor unions at the factories. So Tesla would not qualify for that additional $2,500. So Tesla vehicles would qualify for a $10,000 tax credit. The Ford F-150 Lightning would qualify for the full $12,500. And probably some General Motors vehicles would qualify for it. I'm not sure if any others would qualify for it. As far as I know, Tesla has no plans to adopt labor unions. It's unlikely that labor unions would succeed at Tesla, and I doubt the benefit of this $2,500 tax credit would make it worth it to Tesla to add labor unions or to have labor unions representing their workers. Tesla is really focused on rapidly changing how they do things. Unions tend to slow down that kind of rapid iterative change. So unions would be very bad for Tesla and the way they work. I had a little fun with this by saying, here's Drew Baglino. This is really from Battery Day. This didn't really happen, but Drew Baglino says, hey, they're giving you a $10,000 tax credit to buy our cars. And Elon thinks, we're going to have to build a lot more factories. This $10,000 tax credit would massively increase demand for Tesla vehicles, and it would mean Tesla would have a huge incentive to accelerate factory deployment in the United States and increase vehicle production in the United States to capture as much of this benefit as possible for as long as it lasts. And in this meme, I'm making fun of Jim Farley, who's above my head, who hears about the tax credit that would be $12,500 for the Ford F-150 Lightning, and he says, now we'll only lose $20,000 for each F-150 Lightning we make. The Ford F-150 Lightning looks like it's going to cost Ford a huge amount of money to make. There's no way they're going to make money on it at the prices they're talking about. And so I'm exaggerating a bit. Maybe it actually cost them $100,000 to make each one. We'll see how it goes. But this would help them survive the amount of money they're going to lose on each vehicle, if I'm correct, and they can't make money on EVs the way they're structured. I told you we're going to dig into the weeds. This is the weeds. This is a document from the Senate Finance Committee that was produced yesterday after the vote, showing the modifications to the EV credit. You can see in the first paragraph, the chairman's modification provides an additional credit amount of $2,500 for new qualified plug-in electric drive motor vehicles, those are Teslas, for which the final assembly is at a facility whose production workers are members of or represented by a labor organization. That is not Tesla, that is Ford and General Motors. It may apply to some other companies that come along, but right now, as far as I know, this would only apply to Ford and General Motors. They're the only companies that are making EVs with union labor in the United States. I don't think this would apply to a facility that is producing vehicles in another country with labor unions in that other country. I think this is only intended for production in the United States. And there's an additional credit amount in the second paragraph for new qualified plug-in electric drive motor vehicles for which the final assembly is at a facility in the United States before 2026. The Ford Mustang Mach-E is made in Mexico. It is assembled in Mexico, so this $2,500 would not apply to the Ford Mustang Mach-E. I would not be surprised if that's changed in some way to give Ford the benefit of this tax credit. We'll see. Or maybe Ford will decide to move manufacturing or final assembly of the Mustang Mach-E to the United States to qualify for the credit. I don't think that 2026 detail matters a lot. There's a reference here to vehicles sold after December 31, 2025, i.e. 2026 and beyond. The base of the amount of the credit is increased from $2,500 to $5,000. I think that's because in the previous language, the base amount of the credit was lowered by $2,500. So this just offsets it and leaves it so that the credit is $7,500 base credit, $10,000 for vehicles made in the United States, and $12,500 for vehicles made in the United States by union labor. And you can see it says under the modification, a new vehicle is eligible for a maximum credit of $12,500 if assembled in the United States at a facility whose production workers are members of or represented by a labor union. And then in the lower paragraph, you can see the chairman's modification requires that the manufacturer's suggested retail price be $80,000 or less. So currently the Tesla Model S long range is priced, I think it's $79,990. I think that means that you would not be able to get options. It's an interesting question how this would apply to FSD, for example, or if you had your car painted a special color. This might put a little pressure on Tesla to lower the price of the Model S long range a little bit to qualify all vehicles sold by Tesla for the credit. Also might see some pressure to lower the price of the Model X. That probably won't happen right away. I think initially Tesla's going to take a hit on Model X sales and focus on selling Model S. Also, probably one of the most important bits of language here is at the bottom. The changes to credit amounts are effective for vehicles acquired after December 31, 2021. This is basically a way of discouraging people from buying electric vehicles in 2021. I'm not sure if that's what's intended or if that's what's really going to stay in the language, but if you were thinking of buying an EV in December of 2021, it would be pretty smart to wait and hold off until January and rent a car if you had to, because you're going to get a $10,000 tax credit if you buy the vehicle on January 1st. This particular bit, this thing at the bottom here where it says vehicles acquired after December 31, 2021, that could actually suppress EV sales for all EV makers. The Mustang Mach-E could be affected. The Tesla Model S, Tesla vehicles could be affected. Now, what I'm seeing is there is so much demand for Tesla Model 3s and Model Ys. And there's so many people who, look, if you're looking in August or September, you're probably still going to buy a vehicle. You're not going to wait till January. There are going to be some people who are going to hold off until January to buy their vehicle, but there are other people who just need a car now. There's a lot of people who may not be aware of the tax credit. I would think this big, a lot of people are going to know about it, but I think they will sell enough vehicles in 2021 anyway. But this could lead to a decline in sales, and Tesla could very well decide to hold on to some cars in December and deliberately suppress sales in 2021 and shift those sales into 2022 That's what happens when you write bills like this. It would make a lot more sense to me to make it effective immediately, and that way you don't have this weird effect on sales. And maybe that's what'll happen when it goes through the House, and the House and the Senate work together, and they work with the president to come up with final language. That would make a lot more sense. Last thing, I just want to be clear on the language about when this phases out. There are people who think once Tesla's sales are 50% EV, then the phase out starts, and that's not how it works. It's once total annual sales of new qualified fuel cell motor vehicles and new qualified plug-in electric vehicles. So it applies to fuel cell vehicles too. There aren't very many of those, if there are any at all. But what this means is that when all vehicles sold in America, so there were like 17 million vehicles sold in America in 2019, I'm guessing that's the number. That would mean if there are 20 million vehicles sold in, say, 2023, if 10 million of them, or 10 million and one, were EVs, then that would start to phase out. I don't think we're going to see EV sales in the United States reach that level until 2024 or 2025, if not later than that. So the phase out will not start for a long time. When the phase out starts, the next calendar year, you would see a 25% reduction in the credit, then a 50% reduction the year after that, and then the credit would be gone the year after that. So there's a lot of time. This credit lasts a long time. This is going to matter a lot for Tesla shareholders. So there are some big things to talk about. First of all, this isn't a law yet. This is a bill. It hasn't even passed the whole Senate yet. It got out of one committee. Not sure if it has to go to another committee or not, but this is the most progress we have seen on any electric vehicle tax credit bill so far, that it actually got out of a committee. If this bill goes to the floor and it passes, that would be some incentive for the House to put forward a similar bill, pass that bill, and if the House and the Senate can agree on legislation, that would go to Joe Biden, and Joe Biden would have to make a decision about whether he's going to veto it or not. It seems very unlikely that Biden would veto this bill if it came before him. Whether this is going to come before Joe Biden is a really big question. Right now, Biden is talking about an infrastructure bill with $1.7 trillion in spending. The Republicans have come back with something like $900 billion in spending. So far from their proposals, I haven't seen anything that really locked down what they're doing with EV credits. So it's not clear that what they're doing is even going to relate to this. It sounds like that's what they're talking about, but we haven't seen any numbers, any particulars of any of their proposals. And if this bill goes through, it really doesn't matter what Biden and the Republicans talk about, sort of grand scheme of things, plans. What matters is what bills get passed by Congress and what the president signs. If this bill goes through, it is a huge positive impact for Tesla. Basically, what it means is Tesla would not have to reduce prices on its vehicles. It would be able to continue selling its vehicles at higher prices than it might otherwise. It would sell huge volumes. It really would be an incentive for Tesla to accelerate factory deployment, to building more factories and producing more vehicles, because the demand is just going to go off the charts if you effectively, this drops the price of a Tesla vehicle to the buyer by $10,000. These are refundable tax credits, so even if you don't owe money, or if your tax credit is bigger than what you owe, you get a check back from the government. So this is a massive incentive to buy an electric vehicle. And I would say this is a massive problem for anybody producing internal combustion engine vehicles. Because now imagine you're thinking about buying an SUV, and a long-range Model Y was $45,000, and now effectively to the customer, it's $35,000. So it's not just competitive with the Lexus RX anymore. Now it's competitive with the Toyota Highlander, and maybe even competitive with the RAV4, especially when you consider the total cost of ownership of a Tesla, an electric vehicle. The fueling costs less. You never have to get an oil change. They last longer. There's so many benefits to an EV that it's really going to make a lot more sense to buy a Tesla than to buy any internal combustion engine vehicle at all. Tesla Model S long range at $79,000, taking $10,000 off of that, $69,000, is really, really amazingly competitive with a lot of mid-level luxury cars like the Mercedes E-Class and the BMW 5 Series. It really would not make sense to buy any of those vehicles when you get a long-range Model S that actually would have more range. BMW M5 actually has less range with gasoline than the Tesla Model S long range has with electric. It's really a huge, huge difference. And the Model S is just a much nicer car. It's a faster car. It's a more comfortable car. And if you have FSD, it can drive you around. Another issue is, how does Tesla do FSD? Maybe Tesla would sell you the car without FSD, and then give you 60 days to add FSD later or make FSD full self-driving an add-on option later. I could see Tesla deciding to sell the cars without a lot of features and then offer the buyers to do software upgrades afterward. And that probably would get them around this MSRP problem. It would enable them to sell cars under the $80,000 limit and get more vehicles in under that. I'd be very surprised if they didn't come up with a Model X under that $80,000 mark to take advantage of this credit. And I also think this has an impact on the Texas Model Y. Texas will start producing a Model Y in the end of this year, by the end of this year, hopefully. And that Model Y will be in low volume at first. So I wouldn't be surprised to see Tesla come out with a really high-end version of the Model Y with rapid acceleration, really long range, and a lot of other features, and charge $79,000 for it, but make it an ultra-high performance vehicle that's also really, really practical. Once they scale production of the Model Y and they've got a lot of vehicles coming out of the factory, then they would start selling them for less money, and then they would convert Fremont over to the new manufacturing approach and gradually get the price of Model Ys down to that $45,000 number for long-range vehicles. There are other important energy efficiency credits in the bill, 30% tax credits for things that probably include Tesla Solar Roof, Tesla solar panels, Tesla Powerwall, Megapack, commercial vehicles, so it wouldn't be surprising to see this apply. We might see significant credits for Tesla Semi, and maybe we'll see a commercial version of Cybertruck that would get some benefits as well. And if Tesla comes out with a Cybervan or a Cyber minibus, that should also qualify for some kind of credits. For Tesla shareholders, this is absolutely stunning. We're going to see massive increase in demand for Tesla vehicles. We're going to see Tesla probably respond to that by producing more vehicles, maybe building an extra factory to get going here in the United States, really cranking out the cars. Once the 2023 vehicle comes out, the vehicle that was hinted at Battery Day, that vehicle is supposed to be $25,000. You give $10,000 tax credit to a $25,000 car, and you're talking about $15,000 for what may be the best car in the world. Incredibly efficient, great vehicle, can run it as a robo-taxi. I would not be surprised to see that happen. If this bill goes through, it really would accelerate the transition to sustainable energy, and along the way, it would massively increase Tesla's profits. One of the things I expect Tesla to do is they will keep their prices higher than they otherwise would. So if they were going to lower the price from $45,000 to $40,000 for, let's say, a Model Y, they keep the Model Y at $45,000. The consumer who was paying $45,000 before is now paying $35,000. If Tesla lowered the price of the vehicle to $40,000, the cost to the consumer would ultimately be $30,000. But the demand is so high, Tesla is not going to be able to keep up with that demand. So they're going to need to keep those prices up just because they literally won't be able to. The line to buy Teslas will be too long, and that's not good either. Currently, people are waiting as long as 4 months to get a Tesla. But this means that Tesla's margins will go up dramatically. They will get larger and larger margins. Their sales volume will go up, and that will translate to much larger revenue, much larger profits. And it means we're going to see Tesla's share price going up even faster than I've thought before. I can't predict how Wall Street will respond to this news. I was really surprised when I saw this news that the stock didn't jump immediately this morning. But regardless, the stock is up a little bit. Once people catch wind of this, if this actually goes through, if the Senate passes this, if the House passes something similar, they come up with a bill like this with a $10,000 tax credit that applies to Teslas. And this is going to go on for years. This is going to go on for 5, 6, 7 years. Tesla could be producing 18 million cars a year worldwide, sell 8 million cars in the United States. It still might not put the collective country over half of all vehicles sold yet. And if that happens, it keeps going. It's only when the total EV sales get over half of all vehicle sales in the United States. Now, if the other vehicle manufacturers respond to this as well, then maybe we will see a much greater increase in EV sales by Ford and General Motors. I'm just not convinced they can do it even with this tax credit. I'm not sure even with the tax credit, it's enough to get them where they need to be to produce vehicles and make a profit making them. So let's put these numbers in some perspective. I'm expecting Tesla to produce 2 million vehicles in 2022. Now, they won't all be in the United States. So Fremont should produce about 500,000 vehicles. And Giga Texas will probably produce about 500,000 vehicles in 2022. So call it 1 million vehicles between those two sites and give them $5,000 in extra profit per vehicle because they capture some of the tax credit. That would mean an additional $5 billion in profit for Tesla in 2022. I think Tesla is going to do over $10 billion in profit without that. So this is a pretty big jump in profit for Tesla, and that has an impact on the share price. Go out to 2023. Fremont might produce 750,000 vehicles in 2023. And Texas will probably produce over 1 million vehicles. So let's call it 2 million vehicles for 2023 produced in the United States by Tesla. With $5,000 in additional profit because of the tax credit, that works out to $10 billion in extra profit. And you can push out this story more and more. Add the 2023 Compact Factory probably producing 4 million vehicles, all of them costing way under $80,000. Maybe you get 6 million vehicles produced in the United States in 2025, getting this credit with an extra $5,000 in profit. That's $30 billion in extra profit. Stretch this out to 2026, leaving out the potential for robotaxi profits and other profits. I think we're going to see Tesla earning as much as $100 billion a year in profit when you add everything together. At $100 billion a year times a price earnings ratio of at least 40, and you're talking about $4,000 a share. Should be more than that. Then you add in robotaxi, you add in other things, it goes up even more. But 2026, without all the other great stuff that's happening at Tesla, I think we're looking at potential for $4,000 or $5,000 a share. Add in robotaxi and it goes through the roof. So I think robotaxi is going to happen, but that's not the subject of this video. So even without robotaxi, 2025, 2026, we're looking at $4,000 or $5,000 a share. So I'm excited about this news. I hope you're excited. Something like this is probably going to happen. We're going to see a substantial tax credit that's going to benefit Tesla. It's going to benefit Tesla car buyers. It's going to benefit Tesla shareholders. I'm buying a Cybertruck next year. I own a lot of Tesla stock. I'm really stoked about this. I hope you are too. If you like this video, please check out my other videos. Check out the merchandise, the Elon stainless mug, the Starship t-shirt, and other t-shirts at elonbits.com. You can check out my book, Fair DUI, on Amazon. It's got like 4.7 stars or something like that. Please support the channel on Patreon. Link to that below as well. And thank you so much for watching.